Today, if you've been participating in the main chat and the investments chat, you've probably seen that we've kind of talked a lot about, what these new laws have in store for crypto traders. It's particularly frustrating, I think, for DEX traders. And so, what we're going to talk about today is how to basically come up with a system that makes it a little bit easier on us. And for today, what we're going to go over real quickly is like why to report these transactions and why to track them manually, the specific form, what it looks like, what do you have to track, and what's helpful to track. A lot on the cost basis, because that's kind of a tricky thing. Some accounting methods, I use something called first in, first out. How to reset your cost basis, how to incorporate transaction fees, how to handle reflections tokens, a little demonstration. We're going to talk about how to convert Excel data into the form itself, and then just a little bit of editorial on blockchain analysis and your data. So just quickly, this is not financial advice, it's transaction recording guidance. And if you have any specific tax questions or strategy questions or decision-making issues, a certified tax professional would be the person to talk to. And my particular qualifications, I am not a tax or accounting professional, but I'm offering this on the basis of a lot of research, synthesizing, public information, and also additional consultation that I've had with my own accountant on how to track crypto and if my system makes sense and all that. So as with all matters in crypto, rely most heavily on your own research. All right. So why would you want to report at all, and why might you consider doing it manually? So I know I've had a lot of discussions with people who've said, I don't really trade on SEX, trade on SEX on centralized exchanges. Some of you may trade on SEX. That's none of my business. If you trade on centralized exchanges, then what we know is that probably starting a little earlier than 2024, but certainly in the 2024 year with the new infrastructure bill changes, CEX will start reporting trades and gains and losses to the IRS, and they're going to send you as well as the same copy of that form. But you might be saying, well, I don't really do any trades on that platform. I only use DEX. I do conversions, I mine, things like that. Well, a lot of our BSC chain stuff has to come from somewhere. So maybe you buy, a few BNB on Binance, in the US. Maybe you buy, I'll come to Bitmart and things like that a little bit later. But so we probably do have some interactions on CEX to some degree, but even if we don't, it is still helpful to track and report. So something that people don't always consider is that it is actually fairly easy to link private wallets to CEX and KYC transactions. So whether that's KYC on the part of the platform, or even just KYC from certain pre-sales. And it's pretty basic blockchain analysis. I mean, if you're transferring a BNB off of Binance into Trust Wallet, it's pretty simple to assume that originating transaction, the subsequent wallet that's receiving it, is probably yours. It's pretty easy to start linking that, especially if there's multiple transactions. If you have a wallet that's linked to a KYC and you have frequent transactions between that wallet and a separate DEX wallet, that's pretty easy to spot too. So, they're not as stealthy as we think. Issues with, so let's say you don't report, because you're like, what, all I have are losses, or no one's going to catch me, like something along those lines. Well, what happens if you want to convert, you have a huge win, you want to convert, say, 50 grand or 100 grand or even, 10 grand into fiat? Well, the question is going to be, where did that money come from? So if you can account for it at the end of the year, you'd be all set on that reporting. Keep in mind that every blockchain project, except Monero, which is a project that the government absolutely hates, every blockchain project is pseudo-anonymous, and all the blockchains are permanently transparent. So that means, even if you think it might be difficult now, in a few years, even maybe less than that, improvements in blockchain analysis are only going to increase as agencies kind of increase their focus on crypto. So another thing you might be asking is, why would I do this on my own versus automated tracking? So there's a couple really good sites that you can just put in all of your wallet addresses. You can link your Coinbase, your Binance. One of them is Coinly. I believe it's coinly.io. And it's very good. I really like their focus on privacy. But I tried it, and my figures that they spit out to me were all wrong. It's because if you do a lot of converting of crypto, which I do, converting is not swapping. Converting is where you say you convert Bitcoin to Binance, and you don't do it on a SEC or to BNB, and you don't do it on CEX. Then Coinly gets really confused. They also get confused about what is a transfer versus a transaction. So if you're doing all your trading on CEX and maybe you have one DEX wallet, like, you might be in good shape. But I think for a lot of us, um, the automated is going to come up with errors. And so at least if you know how to do it manually, you won't be screwed at the end of the year. So automated tracking can be a little more precise because they're going to get down to, like, uh, the 10th integer on the decimal point. But again, there's some inconsistencies in terms of they don't quite know how to track everything properly. And then with privacy issues, you're handing over all your wallets, all your accounts, things like that. I mean, I'm sure they're trustworthy, but that just doesn't really sit well with me. I don't like the idea of having to hand over financial information to a third party just to meet, some reporting criteria. So, any questions on this so far from anybody? I have no idea how many people are in here, but any thoughts or questions on this slide?
No, that's awesome. That sounds really, really good. I just encourage you to kind of dive in. It sounds really good.
Okay. All right, so this is what the form looks like. It's form 8949, and you can use this for reporting short-term. The second page is long-term gains, but most of us are probably going to have short-term transactions. And it's pretty basic. These F and G columns are not really used for crypto, is my understanding. And what needs to be reported, you need to have a description of the asset. So you can do 2.5 BNB, BNB 2.5. The date you acquired it, and acquisition just means, you bought it, you received it, you converted it.
Hey, CryptoCat, sorry, are we supposed to be seeing a new slide? And we're not seeing.
No.
Oh, okay, good. Sorry. I'm not sure if you're meaning to be showing a new slide or if, because right now we're still seeing the title slide.
Oh, you are?
Yeah.
Huh. You're still seeing the title slide.
Oh, see, I wasn't sure. So I was actually just commenting on the information you were sharing, not so much that I was looking at a slide. So I was actually just taking in what you were saying, but I didn't know we were actually supposed to be seeing even on that first little blurb. So that's probably my mistake. I was just aptly listening. So.
Oh, okay. Well, I guess that means I was able to at least properly reflect what I wrote.
Yes, 100%. Yeah.
Let me just do my entire screen, and hopefully it's not like an infinity loop. Can you see the what's required slide now?
Absolutely. Yeah. Yeah.
Okay. And can you see it now full screen?
Yes.
Okay. And I assume you see all my open windows and whatnot here on the bottom.
Yes, you see the open windows on the bottom. Yeah.
All right. So I'll go back real quickly. This is what the form looks like. And this is like what I was talking about just before. But so what you have to report is the description of the asset, when you acquired it, when you sold it, and sold can mean sent, converted, swapped, whatever that might be. The sale price, so that's the value at time of sale. And you would include transaction fees in that, whether it's adding them or subtracting them. So the cost basis is kind of the trickiest thing here. It's the value of what you're discarding at the time of acquisition. And what's tricky is that we accumulate BNB through various swaps, and I'm going to get into this in a lot of nuance. But one BNB has different cost bases if it's accumulated from multiple swaps. And then you have to report the gain or the loss, and that's just the value of the sale price minus the cost basis. No one feel the need to necessarily take notes, because I'll share these slides when we're done. But so that's what's required to track. Here's what I've found is helpful to track. So a first in, first out value sort of system. Oddly enough, you don't have to report what it's being sold to or swapped to, but that's essential for us. The amount that you receive. So I also record the BNB price at time of the transaction. So I just go to Google, I type BNB price USD, and I record that. And something that I'm just calling the BNB number, which is the amount of the remaining dollar amount in the BNB amount after each transaction. Then any additional notes, like for example for move to. So there's a few different methods for cost basis, and they're listed in a lot more detail on this Coinly blog that I recommend. But first in, first out is kind of the easiest, which means the first crypto sold is the first bought. So if I have accumulated one BNB from selling, say, example, EGC for 0.5 BNB and then RMTX for another 0.5 BNB, the order that you'll do it is EGC, then the cost basis for that EGC, and then the cost basis for that RMTX. And that'll look a little clearer when we go into it. Last in, last out is just the opposite. The last one you bought is the first one you sell. Average cost basis, it's the total amount paid divided by the total amount held. You'd have to look a little more into that because it's not permissible for all types of transactions. And since I don't use it, I sort of let this one go a little bit. Highest in, first out, exactly what it sounds like. You track the highest cost in is the first one out, lowest cost in, first one out. So specific ID, that's really tough. That means you're like, I'm selling this chunk of BNB and I have the exact transaction, hash ID to kind of prove it. And crypto with the largest loss is the one sold first, is for loss gain utilization. So here's a simple example of cost basis. So let's say you purchased one BNB with fiat for $500. Very easy. Your cost basis is $500. You then buy 0.5 BNB of EGC. Your cost basis, that's half of one BNB, so half of 500 is 250. If you buy another 2.5 BNB of RMTX and another 2.5 BNB of XMR, your cost is 125 each, because that's 1/4 of 500 and then another 1/4 of 500. So you've just cleared out that one BNB. That's about as nice and tidy as it gets. These are all nice, simple numbers, nice round numbers too. So any questions on that?
Hey, real quick, for the purposes of tax reporting, I mean, this really, I see this really becoming a factor or something to consider if, I guess, like, you're overlapping reporting periods. Because if you spend, let's say you buy your whole BNB and sell back whatever token you bought in the same reporting period, then FIFO doesn't really, I guess, like, apply, because your cost basis would be whatever you spent to begin with, since you cashed that out in that same period.
The cost basis kind of holds for whatever this is the cost basis and will always be the cost basis, but this is really simple, but it gets more complex when you're you have BNB accumulated from different cost bases. So I don't, am I answering, or at least reflecting on what you said, or did I get that wrong?
No, I gotcha.
Okay. It's so tricky, and trust me, I have a lot of opinions on this that I'm happy to share privately, but it just seems like this is what we kind of have to do now. And so feel free to chime in as we go along, because I'm sure you'll have some good things to add, okay? Sounds good.
Yeah, that's awesome.
All right, so here's a gain example. You bought 1,000, CryptoX with one BNB valued at 400. So your cost basis of CryptoX is now $400, nice and tidy. Now let's say you want to, I should say swap, not convert. You want to swap 250,000 of CryptoX back to BNB. However, 250,000 CryptoX is now worth $1,000. So if 250,000 CryptoX is 1/4 of your original buy of 1 million, your cost basis is 1/4 the original cost basis. 400 times 0.25 or divided by 1/4, 100. So you got $1,000 value minus a $100 cost basis. So that's a $900 reported gain. This is super easy when it's just these nice tidy numbers, but it gets a lot more difficult with complex numbers, which is almost exclusively what we're dealing with. So what do you do if the sale of with 240,204,192 CryptoX, if the original buy was 2,402,003, so on and so on. So maybe someone with a little more finesse with numbers has a better idea for this, but I've been able to get really close by just kind of eyeing the number and multiplying by a factor and then playing around a little bit with the decimals, and I can get actually really close. This sounds like it would be tedious. It really only takes about 45 seconds. So I would just take the total here. Oops, sorry. The total here that looks awfully similar to the amount that I'm selling. So I multiply it by 0.1, mess around with the decimals a little bit, and I can get really close to that 240,214,000 and work with that number. So this is kind of tagging back a little bit to where I said, the Coinly and the automated trackers are going to get a little more precise, and we're going to have a little imprecision. If somebody has kind of a better thought on how to do that, I'd be all ears, because I'm happy to, if it can be made easier, I'm happy to hear about it. So in this case, you would just multiply that 400 by the decimal for the amount that you're selling. And so you have a pretty tight cost basis of $40, more precisely $39.99.6. And I'm going to address that last point in a second. So a loss example, same thing. You have 1 million CryptoX with 1 BNB valued at 400. Your cost basis is still 400. And you then want to convert 250,000 back to BNB, but that crypto is currently worth $50 for 250,000. Same thing, you divide or multiply, you divide by a fourth, or you multiply by 0.25. Your cost basis is the same as the last example, but in this case, you're taking that $50 sale price, you're subtracting 100, and you're reporting $50 as a loss. So here's a little bit more of a complex example, and frankly, when I'm tracking, I have a mix of simple transactions and complex transactions to track. So if you buy 1,000 CryptoX with 1 BNB valued at 550 at the time of transaction, that 1,000 CryptoX, the cost basis is 550. But what if excuse me, actually that's not correct what I just said. So if your 1 BNB was accumulated from, say, 4 previous transactions, let's say in order they were some amount of EGC for 0.25 BNB, and you're looking at your transaction history and you know that sale was 155, you have 0.5 of that 1 BNB accumulated from RMTX, which you sold for 250. You have some SHIB, 0.15 of it, BNB from that for $76, and you bought 2 BNB with fiat for 500 per BNB. So if we're looking at first in, first out, you're just adding up, and I'll show you how you already have these. I'll show you why you kind of already have these figures noted, which makes it a little bit easier. But you're accounting for the majority of your 1 BNB, but there's a remaining 0.1 that needs to come out of this 2 BNB that you bought with fiat. Does anyone have any questions about this part?
No, I'm good.
Okay. All right. So how do you get that 0.1 BNB covered? So if you remember the last portion of that BNB, so you got 2 BNB, right? You need to account for 0.1 of it. So if 1 BNB was 500, and if 2 BNB is 1,000, right? You just multiply 500 by 0.1, and you get $50. And you add it all together, and the cost basis for that one BNB that you bought CryptoX with is 531. And overall, you have a gain of $19, right? And you would note this in your spreadsheet. Does everybody kind of see how we got that?
I see how you got it, but I also see that even for myself personally, I'm, well, I mean, and I know the way that I've tracked stuff for myself in the past is definitely erred on the side of probably overpaying what I probably end up having to deal with, not tracking at the level that you're tracking at. So, you know, so there's absolutely massive advantages to, even though it seems, and I'm sure people are like, oh, this, right. The reality is if you want to maximize your ability to keep as much as possible, you know, on you, you kind of do have to get to this level, unfortunately.
And I know that when we look at these slides, it looks like, oh my God, who's going to do this? Like, this looks like such a time waster. Honestly, like, let me be honest with you. I am not a math person. The only reason I passed algebra is because I baked my teacher cookies with the quadratic formula on them, and she took pity on me. And so, so if I could do this, I promise you the majority of people out there can do it. And the more you do it, the easier it gets.
Oh, yeah, 100%. I think that's the key point is the reality is what you're demonstrating here is actually, in my opinion, these are some of the ways that most people should have been taught math in the first place in terms of how to actually practically apply it. Because, you know, a lot of the stuff that a lot of people say, okay, I don't know what the point of me learning this stuff was, comes kind of full circle, and then all of a sudden there's a practical application and it absolutely makes sense. So I agree. Like, you know, we'll call it the foundational work to get into the, it's more of getting into the habit of actually adopting the practice is the hard part. But once you've actually got the system in place, it's, you know, it's relatively kind of, you know, almost muscle memory at that point.
And the other reason I suggest kind of doing this manual tracking to this level of granularity is it's actually made me a little bit of a smarter trader because I can see the consequences of my decisions, whether they're good or bad. When I'm, you know, if I'm selling, if I'm swapping something and I see, oh wow, like my gain on that was not worth the effort. It was not worth the amount of time I put into that one, like in terms of watching the chart or like, look, I can see like all these reflections tokens I'm buying. Like by the time I pay my tax, rather by the time the swap tax is taken out, and I can see precisely like how much, like especially when you look at that accumulated BNB, how one BNB might at the time be worth say $500, but if you look at your accumulation of it, you kind of you can lose sometimes more than you think.
For sure. No, and this is exactly, like, and this is why, you know, I always try to tell people, like, the more educated you can get about the numbers side of most of these decision making processes, the better arm you can be to not just kind of see a chart go up but not actually account for some of these things and actually be at a net loss. Does somebody got their hand up? Because it's actually funny that you're doing this today because you know, the core team and I were talking today, and we literally said, and we do feel like this year might be the last year that people can kind of get away without dealing with this and then coming full circle back at them. So it's good that you're raising it because we literally, no word of a lie, had the conversation saying this is probably the last year where people can't be on top of this stuff. Really.
I feel exactly the same way. I think this is sort of like, you know, the golden goose egg is about to hatch and get stomped on and fried up, you know, like starting in 2024 reporting, I think 2023 reporting. So there's a hand up.
There's a hand up. See how I bring him on 1 sec.
Hey, can you hear me?
Yes.
Hey everybody. This is Hokage Ani on Discord.
Right on. Nice.
Yeah, thank you for presenting this to us. This is really cool. You know, having the PowerPoint deck and having it organized and going over the math on all this. So, like for like an individual like me, and there's probably a lot of people who've done like transactions, have not tracked, you know, all the transactions or anything like that, and just been going on MetaMask and Trust Wallet, just buying and selling. Yeah. What is the best way or practical way on how to track that? Like, let's say 2 months in, you've been doing all these transactions. Like, what is the best way to do it? Because I'm sure there's probably not an app out there where you can like go to and it tracks all of that. So like, how can we, track it all, put it into an Excel? Like, what's the best possible way to go about that?
Do you happen to have all of your wallet addresses that you've used for transactions?
Yeah.
As long as I talked to some people and myself included, like I actually don't have some of the wallet addresses that I've used because they were empty and I just didn't think to keep track of them, and that's what made that's one of the many things that made the automated a little bit difficult. If you have all of your addresses and you are comfortable giving out to Coinly, like any CEX accounts that you have, they can probably do a pretty good retroactive report on what you have, which you might be able to use. But actually, that question is precisely what I wanted to talk about in this next slide: resetting your cost basis. And it's because right here, cost basis is virtually impossible to know if on DEX and just starting to track. It's really hard. And like JP and I were just saying, how this is kind of the last year that it's going to be a little bit of a free for all. Do you think you could perhaps track retroactively back to January 1st of this year?
Yeah, I think so. Yeah.
Okay. Because anything that you have done within the last month and a few days, you could probably track it back a little bit. You could probably check on BSC scan for BSC scan includes like the approximate value at time of the transaction stuff. So that's pretty helpful. But I suppose what you could do is like decide going forward, I'm gonna track, and try your best there. Because I really basically can't track last year. I had to start from January 1st of this year.
Oh yeah, and actually CryptoCat. So that's the thing. I think that the one kind of absolutely guaranteed self-defeating exercise is to actually try to go back. If you've got a kind of large history right now, it's way better to actually just try to start building the discipline right now. And actually feel like you can be successful incrementally. And what might actually happen is you might actually you'll probably get confident enough to actually start going back and tackling some of your retroactive transactions. But I personally wouldn't make that the point to start from, because you'll be trying to actually tackle learning two things simultaneously.
Yeah.
How to effectively try to even track back, let alone actually record. And then B, the recording process, which is a skill unto itself. So I think, and this is, it's kind of akin to email bankruptcy, if you want to call it that, where you just kind of start over and reset the slate and just say, okay, this is how I have to start managing this stuff and move forward.
And I think that's a sign of sort of a good faith effort too,
Can I add something real quick?
Sure.
I think, for all of us that are starting to track, like, let's say from this year and on, right? Maybe what's an easier thing to do to begin with to get us like in that mindset is kind of like think, okay, what was your cost basis at the beginning of the year? What did you start out with in your investment? And then like at the end.
Are we still there?
Yeah, who was asking the question? I'm not sure who asked the question.
Well, let me kind of get into this slide a little bit, because that's what I I had the same questions as everybody when I was trying to do this. So let's just go over this real quick and then get some other thoughts. But so like the last person was saying, maybe what you can do is take a sort of almost like an average from last year. But I wanted to reset my cost basis for all my BNB, and I did this on I think January 1st or December 31st. So if I had let's say I had 1,000 BNB, which I didn't, but let's say I did, and it's accumulated from hundreds of transactions, there's no way you're going to figure out that cost basis. And so something you can do to just reset it is swap it from swap it from BNB to BUSD and then back to BNB. And then that swap back becomes your reset cost basis, almost like your starter. Now, you'd have to almost, that still runs into the problem of, well, what was my cost basis before that trade? But I would say it's almost unknowable. And so, perhaps like it's where you take an average for last year or something like that. This slide, I really wanted to talk, say devise your own method and be prepared to justify your decision if need be. Maybe you might need to talk to an accountant, but I think as long as you can justify your decision making and show that it was a good faith effort, that seems fair to me. But I'm not the person who would be, judging your effort if it came to it.
Yeah. Can I just add on to that? Like, and
Sure.
it kind of reiterates what you said right at the beginning. Even the people that are in here that are actually, like certified accountants, they would not be able to give accounting advice, like prescriptive accounting advice, that they can be liable for
Right.
as a non-client. So the thing is everyone needs to recognize it when you're starting this path. At one point or other, even if it's just once over the course of the year, have a accountant look over what you're doing and give, it'll be the best hour of money that you spend, for what you could actually end up having to pay if you're doing it wrong.
Yeah, and trying to go back and fix things is a nightmare. It just kind of is. So yeah, to speak to that, I had my accountant. I talked to her last week, and then I talked to her again earlier today to kind of go over what I was doing with this, and it was very helpful to at least get a confirmation that it's on the right track and to have that knowledge. So resetting cost basis is a little tough, but I think the best thing for me was to convert it to another crypto or swap it to BUSD, and then I have a clean kind of cost basis at least going forward. And so that's what I did at the beginning of the year. All right. So transaction fees, trading fees particularly, are deducted from the sale price. So this is from Coinly. Whatever trading fee is needed to make a transaction, together with the value of the asset, becomes the asset's cost basis. So the fee counts as part of the cost. So if I spent $500 for one BNB, but there was a $10 fee, meaning I spent $510 total, even if the value of that BNB is only 500, the cost basis is 510. If I have a transfer fee from one wallet to another, so they give a good example. Say Hillary buys 10 BTC for 10,000 on Coinbase and later transfers these BTC to her Binance wallet. She pays a fee of 0.01 BTC in the process. So she only receives 9.99 BTC on Binance. She later sells that 9.9 BTC for 20,000. So the simplest way is to reduce your holdings by fee amount and keep the dollar value the same. So that she would just track it as, even if she received 0.1, she would track it as, or even if she received 10, she would track it as 9.99 and keep the same $10,000 cost basis. So that's a little tricky. It's a little tricky, and I do suggest at the end where I post links that people read all those links on their own, just to fill in some of the blanks of what I'm talking about. So reflections.
You got a hand up. Yeah, you got a hand up. Yeah.
Okay.
Hi, I actually had a question on the transaction fee. So I was on another call a few weeks back with another account person talking about a similar thing, and she mentioned that the transaction fee can only be offset if you actually have an LLC or anything kind of corporate, or if you're an individual filing as an individual person, then you can't. So is that a correct understanding, or?
I haven't seen anything like that, but obviously if your accountant said that, I would listen to your accountant. I have a corporation myself,
Okay.
So I do corporate. I have to pay corporate and individual taxes, and my accountant does both of them. And I think that might be a question that's so specific
Okay.
that it
Because,
might be better to ask a professional.
got it. Because she kind of mentioned that the expense, those are considered expenses, and they can only be offset if you have a corporation or any kind of entity defined, legal entity defined. But if you're filing as an individual person, then you can't. So anyway, so thanks for clarifying.
Yeah, no, it's a great nuanced question. I have thoughts on it, but they're purely just thoughts, and I don't want to put them to record because
Right.
they might turn out later to be wrong. So
yeah, and if you don't mind asking, coach, actually I joined very late. Sorry about that. I actually I came on time for the Discord, but I didn't see anything happening there, so I just went back to something else and I checked the game. Anyway, so did you recommend any tool for tracking this? Because or it's all kind of manual. Because
yeah,
there are
just
two tools I have tried myself, and none of them actually work perfectly, especially with all the transaction fees and everything. It doesn't offset everything. So, is there any particular tool you recommended already, or you got planning to recommend something which you have used or have experience with?
well, actually, thank you for validating my comment that it is not as precise as one would hope. The automated tracking. So I did talk about it at the beginning. Coinly is one that I like, but again, it was imprecise. So maybe go back and review the slides when I post them. Okay.
Okay, perfect. I'll do that.
All right.
Thank you so much. Yeah.
No problem.
Yeah, you can carry on. Thanks.
So reflections and airdrops are considered income. So this is particularly important for us in the ITF because, and JP, feel free to chime in here, but we're gonna get a lot received in BUSD reflections, and that's tracked as income. So
see, that's interesting. So that's good to know because there have been lots of people, and I didn't actually verify it. There have been lots of people that I talked to in the U.S. That had shared with me that they, were under the impression that airdrops are currently not tracked as income. So that's going to be a very big piece of information for, for people to really anchor on.
yeah. And airdrops are considered income when you can look right at the IRS webpage on virtual currency. They call it virtual currency. Like there's about 4 Q&As on airdrops, and it says that they're tracked as income. But because there's a discrepancy, like you're hearing other people say one thing and I'm saying another. After we're done, I'm going to go back and just re-verify that. And if there's a need to make a change, I'll post something about that. But I double checked everything, if not triple, and reflections and airdrops are considered income based on what I looked up. So
it does make sense. I mean, it absolutely makes sense that it would be seen like that. But
okay.
That's probably the biggest. Any other interest-bearing, revenue source is kind of, follows those similar principles. So it's not a surprise.
Okay.
Yeah.
Okay. So BUSD reflections are super easy because it's a stable coin. So fortunately it's easy. So I just keep a running tally of how much BUSD I'm receiving. I actually have a separate wallet for Ignite. And you might want to consider doing that because if you are like me and have a lot of like reflections tokens, you're getting BUSD from all different sources, and it might not be just for your own benefit, knowing that you're getting Ignite reflections versus everything else might be an easy way to go. But you can just continually update the date, and then if you sell or swap that, the cost basis is just the dollar value. It's very simple. Just make sure to ignore that last bit because I'll show you what I mean by that later. So it becomes a little more complicated when the reflections token pays in a non-stable coin, such as like, for example, Rematic EGC pays in EGC. So you have to do a little bit of like keeping track of like how much EGC you bought versus how much that keeps going up with the reflections. For me, most reflections tokens I have to claim manually, it seems. And that does make it a little bit easier because you can just track the amount that you collected and the date you collected it. And the cost basis is the dollar value at the time you claim it. So if I claim like 1 million EGC and that's worth, like $5, that's the cost basis. All right. So now you'll see some of what I've been talking about put into actual data, and don't get too frightened. Like this is not as scary as it looks, but here I have, what is this, like 7 or 8 transactions these are dummy transactions. So these are transfers, these are reflections, and I also track like fiat purchases just for my own benefit. So maybe we can do a little quiz here. So if I bought, let's say I bought 0.003 BTC on the 29th of January, and the USD value is 355. I paid precisely 355 for it, and I had no fees. There's no gain or loss there. What is my cost basis up here for that BTC when I go to swap it to BNB? Anybody? That's an easy one. All right, that's 355.
It's the same, yeah.
Yeah, 355. So when I went to sell that 0.003, I got a value of 375 for it in terms of BNB. So that's a $20 gain and loss. So $20 rather gain. So this is the description: acquired, sold, sent, USD value, cost basis, and gain and loss. Those are the required things. That's what matches the form. This to the columns G and beyond, those are extra things that I'm tracking. And I'll kind of give you a sense of what they are. So the 2, that's obvious. The proceeds, that's obvious. It's like just how much. So remember I said I am tracking the BNB value, the dollar value, each time I do a trade. It takes me 2 seconds to figure out. I just note it, because if I ever need to go back, I have it. And I'll explain what some of these other extra numbers mean at the same time. So we got for this transaction, $375 value, a $355 cost basis. That's a $20 gain. And I'm assigning, because I'm changing this to BNB, I'm assigning number 1 here. And under remaining BNB, I would put 1, because I have 1 BNB remaining, and that its value is $375. And I'll show you what this looks like all filled out in a second, and I'll show you why that's helpful in a moment. So going on to the next transaction, let's say I want to buy 0.1 BNB worth of EGC, and it's giving me, the value in which I'm getting here, and 0.1 BNB is worth $40 at that time. My cost basis is 0.1 of the value of that BNB. Now, it's a good thing that let me change slides here. So you see how I've tracked 1 BNB I have remaining, and $375 is what it's worth?
Yeah.
When I go to figure out that 0.1, I already have it right here. So I know I just need to go 375 times 0.01. And it gives me that 37.5 cost basis right here. And I can just subtract it. That means I have a gain of $2.5. And I'm still tracking that 1 BNB over here in the remaining BNB column. So I have 0.9 left, and $337.50, because I'm subtracting that 37.5 from the $375. Let me do a few more, because it's a little confusing, but it becomes really easy once you do it a few times. All right, so now if I'm buying 0.3 worth of BNB and I'm buying RNTX, same thing. I know that I have 0.9 BNB left, and I want to use 0.3 of it. So, and I know that 1 BNB was worth 375 because I tracked it, and I just multiply 375 by 0.3, and I'll get $112.50. and I just subtract that from the USD value. I get a gain of 22.5, and I continue to track. I take 0.3 out of that remaining 0.9. I have 0.6 left, and I have $225. You don't. So the reason that you want to track both how much BNB is remaining and the dollar value is when you get to one of these trickier ones. So let's look at this BNB 0.62. So I have 0.6 BNB left, and I've made a previous transaction, which let's call BNB2, where I received 0.25 BNB. So I need to utilize the rest of this BNB1, and that's why I put 1 here for that first in, first out value. And I have a 0.2 that I have to take out of 2. So all you need to do at that point is take 0.02 times that 100, because that's the cost basis here, or that's the value, and I get $2. So I'm adding $2 to that 0.6, and it's 227. So I'm subtracting 227 from the value. I have a loss of $46.97, and I am tracking that I took out 0.2 from that BNB and the remaining amount of US dollars. It seems really convoluted, but it's really helpful, and it gets a lot easier when you do it like a few times. You'll see I did it again here. So I needed to accommodate for spending 2 BNB, and I had 0.23 that came out of that 2. So 2 minus, let's just say 2 minus 0.23, I think that's 1.77. I just multiply, I multiply 1.77, hold on here. That's a little tricky one. So you can take out 1 BNB, which is 500. So you got 500 plus 98, and then multiply 0.77 by 500 and get the remaining amount there. And you have 0.73 left and $365 remaining from that 1250. Is anyone's head exploding?
No, I mean, here's the thing. It's like the way you've got it organized. I mean, it's, you know, you're literally using like a like a linear flow model for going top to bottom in terms of how you're actually tracking these transactions. So and the amount that you're actually calculating to subtract to actually track the first in, first out amounts. It's more just getting, like, people just need to get used to seeing, it's essentially to carrying over from one transaction to the next if they're actually doing. It's not that bad.
Okay.
I have another question.
Yeah.
Will you be sharing this template out as well? Okay.
Yeah, and you'll see here, so this is how I do it. I have multiple wallets. So I have one wallet that I use for certain things. Again, this is just a dummy transaction sheet, but I have my Ignite wallet. I have a wallet that's linked to KYC transactions. I find it's helpful to know what's KYC and what's not, and so I separate those just for my own purposes. I like to know, and you can just kind of track that way. And I'll share this template, sure, no problem.
Thanks.
All right, so this is super helpful because what's going to happen at the end of the year? I mean, it's February 3rd, and I already have like 50 transactions that I've tracked just for January. And I'm not going to want to enter those hand by hand at the end of the year. So there's a really good website called form8949.com. And what they do is you can upload and it's non-KYC. You really don't, it's not, there's not a lot of privacy concerns, but you can just use their form to upload your CSV file or your Excel data file, and they just fill the form for you automatically. You'd have to make a few changes just to the titles of these things. Like sold/sent, you might just change it to sold or things like that. But that's going to input all the data. So you need to do a little bit of maintenance on your tracking spreadsheet. Like you would take out all the income and the fiat purchases. You would just, cut and paste them into another document because they're not going to, that income doesn't get reported on that form 8949. So this is going to be really helpful at the end of the year. And so my last piece of discussion is keep in mind that when you're reporting transactions on form 8949, you may reveal your wallet addresses. So frankly, it's surprising to me that we don't have to disclose our wallet addresses. I think that's probably going to become, I could see that becoming something that's required in the future. But let's go back to form 8949. So let's say you're inputting that you sold 1.37225769 BNB on February 5th, 2022. And then on line 5, you're reporting that you sold, 4,500,602 Scrooge on, March 3rd. It would be really easy doing just really easy blockchain analysis to take a small subset of even 2 or 3 or 4 transactions that you've reported and be able to figure out, oh, that's just wallet, X. And then be able to see everything that's in that wallet. And so, if you're leaving out that you have, $800,000 in EGC because it's just I'm going to hold on to that one, it's probably pretty easy to figure out who has what wallet. And so, because you've already identified those are your trades. So it's best to not, try to be stealthy or sneaky if you're reporting. Not that anybody would, but I'm just pointing out blockchain analysis is actually really, really easy. And so there are privacy considerations with reporting because your wallet address will probably, if need be able to be identified. A way to sort of maybe kind of try to avoid that is if you have multiple wallets, just putting them in chronological order on the form. So, that way you're mixing up your subsets. And maybe you'd have to think about how much that matters to you, whether you want your wallet addresses revealed or not. For me, it doesn't really matter, but some people are just they just don't like that idea. And so you might have to just consider, is there anything I can do within, while still meeting all my obligations to keep my wallet addresses sort of just to me. So that is the last of what I had to say today. And I really advise you to look at all of these links here. This is the IRS's website on frequently asked questions. It's very thorough. Here's the Coinly blog for the fees and transaction fees reporting. This is a really good article that goes over what's happening with the changes, the reporting requirements in the infrastructure bill. And this goes over all of the different methods of cost basis tracking, which first in, first out, I think for me is the best. Maybe for you, there's a different one, but I think first in, first out is the easiest to track. So that's all I have for the discussion, but happy to stay on and keep discussing it.
Yeah, CryptoCat, that's amazing. Thank you so much. It's definitely got me personally thinking in terms of, different ways to actually track, these transactions, even just for myself. And, because we're actively thinking in terms of, even just tooling individually for stuff that we're doing. So this is actually really, really helpful.
I got something this is Richard here. Thanks for doing that. I have a thought about ITF in terms of just from an ITF perspective. We'd be doing a lot of flow through because we're trading for a big group. Is there any tax considerations, for ITF, do you think, or are we mostly just doing flow through? You know what I mean?
In terms of getting, JP, do you want to talk about that?
Yeah, I mean, it's funny, like Richard's saying that we're actually going back, having a lot of conversations about this right now. And the reality is, part of what stemmed, and kind of triggered this entire conversation, and has got us actually actively, actively working on the solution now, is solely to be able to actually definitively answer that question ourselves. Again, for myself, being kind of edging on the conservative side of the fence, we, even though we know we're doing flow through, it's not complete flow. I'm sorry, I'm getting my words mixed up, but you know what I'm saying. It's not complete flow through in the sense that we're actually, I can't say those words together. That's hilarious. So yeah, we know that we're gonna have to be dealing with this, but and we've actually, and I can't necessarily disclose what we're doing yet. We will share with the community when we actually are in a position to actually talk about how we're actually accommodating this, but we have to deal with it differently on a go-forward basis, whether we want to or not.
Yeah, so that's, I've had some conversations privately with a few people about the best way to handle the ITF distributions. And because it's still so in flux, and I know that the fund is already thinking about it, it's probably going to change. So just for right now, what I'm doing is, you're basically just sending to another wallet. It's not a swap. It's a sell. It's a send.
Yeah.
And so I'm tracking it. I'm tracking the cost basis. What I've been doing is actually making fiat purchases for the fund personally, and then that's the cost basis is whatever I paid for it, and I send it almost immediately. So it's pretty easy for me. But even if you're just using BNB that you accumulated, you just use the same first in, first out way of tracking it, but it's just a send. And then what comes back in BUSD is income that you track, that you just track as like an airdrop or like you would reflections. But again, like that's probably going to change. And so when I'm tracking it, I'm kind of well aware that I'm just sort of jerry rigging it until the time comes where there's new information. So.
Yeah, no, that's awesome. Yeah, very cool. Thank you.
All right. That's all I have. So thanks everyone for coming. So.
Yeah, thanks, CryptoCat. That was incredible. Thanks for sharing all your time and your knowledge. That was very, very valuable.
All right, no problem. Take care, guys.
All right, see you later.
Thanks.
Thank you.
Thanks, everyone.